I feel good saying I'm waiting. You're probably just wasting time. And then you can't complain about not getting the results in the future for the work you didn't even put into, which was maybe getting into the discipline of budgeting, getting into the discipline of playing the game of credit correctly, and putting money away to make those initial investments. Now, when has it not been a good time to buy real estate? When? Throughout recorded civilized history, at least in the last 200-year period, it's always been a great time to buy real estate.
Absolutely.
Best time was yesterday, always yesterday.
Welcome everybody, I'm Kamil Sarji with Gold Door Realty, and this is Just 2 Minutes. Today I have Alejandro here. Alejandro, want to tell us about you?
Yeah, real quick, I'm a mortgage advisor, investor, and coach, educator, motivator, trying to empower people to break the cycle of poverty by making investments in real estate, stocks, and crypto. And so my bread and butter is mortgages, helping first-time buyers and investors alike.
Awesome, very, very cool. And Alejandro has a cool haircut. If I were able to, if I had hair, your haircut is the one I want.
It's old school, I'm bringing it back. I'm bringing it back.
Yeah. What do they say? Business on the sides, party in the back? Right? Is that
Something like that. Something like that, yeah.
I love it. Okay, so I have my timer here. Yeah, so first 2 minutes is going to be random questions, and then we'll go into the real estate industry.
All right.
And ready? One, two, boom.
Boom, okay.
All right. So what's your favorite coffee flavor?
Favorite coffee flavor? I've always said it was Holiday, and is one that I made up. It was typically just black coffee, cinnamon, and raw honey.
Nice.
But
What's your own flavor?
I like hazelnut occasionally, and anything that's like cinnamon-like.
Okay.
But I call it Holiday.
All right, love it. If you were in the desert and you saw an oasis in the distance,
Okay, yep.
would you believe it?
Would I believe it? Probably not.
No.
Not that I'm pessimistic, but what's the probability?
How about Justin Timberlake? If you were in the desert and you saw Justin Timberlake walking, would you believe it?
No, what's Justin Timberlake doing in the desert? Maybe it's a music video. I got to get over there.
Could be. What's your favorite element?
Favorite element? I'm going to go with oxygen. It keeps me alive. And oxygen is actually a combustion.
Yeah.
So I'll stick with that, even though carbon and hydrogen are very abundant.
So speaking of that, are you a nitrogen kind of guy or are you a helium kind of guy?
I'm going to go with nitrogen.
Nitrogen?
Yeah.
How come we pick that?
Well, nitrogen, it's necessary for the plants to grow, crops, and help sustain life. Helium, it's a little unstable, I guess.
Makes your voice funny.
Yeah. Well, I've never actually successfully done sucking the helium and changing the pitch of my voice, but nitrogen it is.
Have you met a Syrian before?
Probably have.
Yeah. How was the interaction with them? How do you think though?
I'd never had an unpleasant experience with foreigners or people with background experience.
Specifically Syrian.
No, it was, I would say positive.
All right, awesome.
I purposely ignored the question.
Oh man, all right, so yeah, if you do...
My good friend here is Syrian.
So
in case you don't know.
Why did you say that? Oh, I met you and it was all right. It was a weird interaction or whatever.
No. But with all honesty, just to elaborate on it, typically they're very humbling experiences when I interact with somebody from outside the country or background, because it just brings elements to you that makes you appreciate what we do have, and then make you realize that there's so much more out there. And quite honestly, when you shared a little bit about your story, I was very intrigued. And I'm like, I got to know more. And then I'm seeing your office and I'm just blown away by the design. I know I haven't stopped complimenting you, but they're very sincere compliments. This space, this place is beautiful. I really like it, how you preserved it, modernized it, and just pay homage to the original character. That's really, it speaks a lot about, in my opinion, what's important to you, your values, and the vision that you have. And then I want to stay in alignment with that.
Thank you.
Yeah.
You're making me blush. I want to talk more about you.
Oh, okay. We can do that too.
So tell me about you. I mean, like lending, right? But you're focused on
Investing.
investors.
Yeah, absolutely,
So I want to
absolutely.
talk about that and how you help.
Yeah. I think it's important to educate in understanding, in the United States at least, how money works and the economy. Because it's easy to get lost in the news and all those cycles that just perpetuate fear and confusion. A hot topic tends to be house prices are high or interest rates are high. But that's superficial. If you peel back the layers of the onion and just begin to ask yourself fundamentally, why? What brought us here? Now you're an educated investor and you make informed decisions, not emotional. That's a big mistake I feel that many of us make, myself included, where we allow emotions to insert themselves in the equation of decision making, particularly business. And in business, emotions don't go in there. 2 plus 2 is 4. And this is important not just for investors or investor hopefuls, but even for your first time home buyer. Because you might hear occasionally the sentiment where people say, no, we're waiting for the market to get better. Well, what does waiting for the market to look better look like? Have you given any thought to what that is? Oh, when prices drop. Okay, cool. What will it take for prices to drop? Do you understand why prices are high to begin with? It's an inventory shortage. We didn't build enough houses in a 10-year span. The census, and you can validate this, check it, 2010 to 2020, population grew by 23 million people. Chances are it was a lot higher because there's a lot of people that just don't participate in the census. And in that same time period, the National Association of Realtors tells us that we only built about 6 million homes. And we can't seem to build them fast enough. Home Depot, Lowe's, and other supply stores are just not stocked up all the time. Builders can't build fast enough because municipalities have some very stringent rules to allowing you to build. They can't seem to get enough workers to do the work. So it's going to take some time for inventory to catch up. On the flip side, if you say, well, prices are high because inventory is low, isn't that the same reason people want to own rare and precious metals like gold? Because there's only so much gold. So over time, gold is going to maintain its value or possibly go up over time. And that's what investing is about. It's about channeling the money that you just trade your time for. Now trade that money for time by putting it into an asset that can outpace inflation. Because we're trying to seek financial freedom in our pursuit of happiness. We don't want to work forever unless you do. So when you think about it from that perspective, it's like prices are high. Yeah, absolutely. They should be high. That's why somebody bought a property 5, 10, 15 years ago. They wanted to be worth more into the future. So yes, it just so happens that prices appreciated way too quickly in the last 4 or 5 years, particularly because of the pandemic, where we made money so cheap to borrow. So this is where the interest rates enters the conversation, which is what? When rates are so low, money is cheap to borrow. A lot of people run into the market.
Jump into it. Yeah.
So demand spikes. Inventory is still the same, drives prices up. So for those who are saying, well, we're waiting for rates to drop, that's not a good thing for you. It's a good thing for those who already own, but not for the person who's trying to buy their first property. Because now you're just going to compete with more individuals. And what does competition do to the prices? The very problem that you're complaining about. So we need to get accustomed to the fact that we can expect rates to be higher for longer. And it's not a bad thing. Rates in the 5, 6, and 7s was the norm pre-pandemic. That 3% was extraordinary because we were dealing with an extraordinary period in history, which was a pandemic where the government felt it was necessary to shut down until we figure it out. In the meantime, they understood that people were going to get into debt. So let's lower the interest rates so it's less of a burden. Well, as a result, the irony was what? People were wearing face masks, but yet they were making lines around the block for 2 hours to go see a house.
Yeah.
Because a house is a necessity, more so today. It's no longer a luxury like it used to be. Oh, it must be nice to own a house. No, it's a necessity at this point because it's a scarce and rare investment asset class. So the conversation, you have to just filter out prices are high, okay, and interest rates are high, sure. But let's look at today's market. What are my reasons for buying? What are my needs?
The thing that people miss is like, you're like, okay, I'm going to wait till next year, but waiting till next year, you're missing opportunities and you're letting other factors dictate your goals.
Yeah.
Like, oh, the interest is too high, I'm going to wait. That's dictating your goal of finding a great opportunity.
It is. See, the thing is, you have to be wiser and talk to an advisor. And an advisor is going to tell you what you have to hear, not what you want to hear. They're not going to validate what makes you feel good, because this isn't about feelings, it's about facts. And I'm not saying this without compassion or empathy. I'm saying it in the sense that if you say, I'm waiting, you're probably not waiting, you're wasting time. And time is something we don't know how much we have of. Now, if you sat down with an advisor, they did an analysis of your credit, income, and assets, and there's a game plan. And the game plan says, hey, we got to wait for these indicators to line up, and that's a 3-month horizon or 6 month, then that makes sense. I'm waiting according to my plan that was designed with experts. But if it's just like, I feel good saying I'm waiting, you're probably just wasting time. And then you can't complain about not getting the results in the future for the work you didn't even put into, which was maybe getting into the discipline of budgeting, getting into the discipline of playing the game of credit correctly, and putting money away to make those initial investments. Now, when has it not been a good time to buy real estate? When? Throughout recorded civilized history, at least in the last 200-year period, it's always been a great time to buy real estate.
Absolutely.
Best time was yesterday, always yesterday.
I did a chart of like from 1970 till now. If you bought and sold every 10 years, it was a crazy number, like 200 and something percent. It was like from 100 to 280% increase every single time you bought and sold.
Yeah.
How can, you know?
Absolutely. It's always a great time, especially yesterday, but we're here now. And if you just think the future, 5-10 years from now, yesterday is today. So you can't be, and here's the thing, you'll never hear me, and I've always cringed when in the past we have colleagues in our industry that just regurgitate and repeat trendy little comments without really giving any thought about marry the house and date the rate. That's silly. Throw that out the window. You don't date the rate, okay? Because the rate might not come down for a long time. So if you're buying with the hopes that you're going to refinance in 6 months, a year, and save $200-300, you're doing it wrong. You're doing it because that's emotional. You got to look at it just now and say, can I sustain these payments comfortably and responsibly for the unforeseen future? If things get better, I welcome it, but not that must happen, because then you're doing it all wrong. And if our colleagues in the industry were a little more honest about that, then they would not repeat those comments. And that's the thing. There's a lot of individuals in the real estate profession, realtors, lenders, attorneys, title companies, etc. So there's a lot to pick from, but we're not all created equal. We have individuals with backgrounds where we understand finances, microeconomics, the history of how money works, etc., investments, and are diversified and actually own real estate. And that would make sense to pick an advisor, not just someone who was able to pass a test and get a license. That's not enough. And I'm not taking shots. I'm just, for individuals in today's market, this is a very competitive market. You need to show the bank that you can comfortably buy a house. Without you telling me, I already know you're saying, I don't want to buy something I can't afford to pay. And we're in agreement. The bank doesn't want to lend you something where your head is barely above water, because it's risky for you and the bank. So if you can't demonstrate that you can afford it, you're not going to get the money. Now, here's the interesting thing that's happened in the last few years. For those who did buy, they're looking to buy a second home. Isn't that interesting? Why? Because they're cash flowing on their multifamily that they bought the first time. They're house hacking. And they, hey, Alejandro, what do I got to do to buy a second property? They understand that this business makes sense.
So is that your sweet spot, you would say?
Yeah.
Getting people into multifamilies and then...
Absolutely. I think that's the best way to enter into real estate, particularly...
That's how I did.
Right.
You know, a lot of people, that's how they did.
Yeah. It's the best way if you are saying, I would like to own multiple properties in the future, or maybe create passive income through this, or begin to create some legacy that can grow. And understand that real estate is a long game. This whole thing, I bought real estate and I flipped it and I made 100 and I'm rich and now I'm balling and I'm driving a slingshot. That's not reality.
Slingshot?
Yeah, the trikes.
Isn't that like 20,000 or something?
I don't know.
Yeah.
Most people don't even own it. They rent it, right?
It's not fun in the winter here.
Well,
you got to put it in the garage.
Yeah. It doesn't make sense. And that's contrary to the concept of building wealth. You don't go and buy toys with that money. You need to reinvest it into more real estate or businesses or other avenues. And then eventually those things can pay for those toys. But I've seen that mistake happen with a lot of investors, that they buy a property, they fix it and they flip it and they make, a nice chunk of money, 20, 30, 40 grand, and then they go spend it. It's like back at ground one, back to zero. You messed it up.
So how do you help people, or how do you guide them towards getting into multifamily?
So we do an analysis first, right? We got to understand where you are financially, credit, income, etc., and mindset. Mindset's very important. Some people already come with that hunger and that motivation. They just need direction in education. That's cool. Then you come with people who have a mindset that needs to get strengthened, unlearn certain things to make room to learn. And some people don't want to put the time through that, and some will. So that's very important, because as we've been discussing the last few minutes, it's a long-term game. You got to put the first building blocks, build a strong foundation to then build a portfolio that you can sustain. Particularly a portfolio that's self-sustainable, where the properties pay themselves off. And that's where these exotic products or loan programs for investors come in, where it comes to the point where they don't care what your W-2 income is. They're looking at, are you putting down the required down payment for this investment? We're going to lend it to you at a 30-year term at X rate. This is your payment. And does 75% of the gross market rents of this property, according to the appraisal, does it pay for this loan? And if it does, that loan is going to get approved. We just have to take care of the other little nuances.
Have you found that it's tough to get to that 75% right now?
For some people it is, but equally surprised when I see some people's bank statements, and it's like, wow, so there's individuals out there with money. And this is where...
How do you overcome that 75% requirement for rent to cover the mortgage?
Oh, you're talking about this self-sustainable?
Yeah.
So FHA, that's a strong requirement, but it's a guiding principle whether you're doing conventional or investors. It's just a guiding principle, because that way you have margin to account for vacancies and maintenance, etc. right?
But why are these guys always changing the rules? Every 2 months, every month, it's a different rule.
There's a little overlay.
Yeah, what's up with that?
So you got to think about these government-sponsored loans. The bank, it's being incentivized by the U.S. government, in this case the FHA loan, to let you, with no business experience typically, or property management experience, buy a business called a multifamily with a minimum down payment of 3.5. Well, if I take 100% of the purchase price and subtract the 3.5, that means I'm lending you 96.5. That's a high risk position as an investor or a lender for somebody with no experience. So to balance the scales, right, or the seesaw, I need you to bring something else to the table on the other side to make this a win-win. I want credit, I want income stability, I want this property to be stable. So it can be frustrating for realtors on both the listing and buying side when sometimes that's the obstacle we have to overcome.
Why don't they just decide on a rule and just stay with it?
The market's dynamic. The market changes. I mean,
so that dictates, we're not getting many loan applications. Let's change it up a little bit.
Yeah, that's part of it.
Take more risk.
The market is dynamic, right? That's the rules that were in the market 2010 are not necessarily the same rules today, right? The markets change, regulations, etc., supply and demand, and a host of variables. The rules exist, or at least these guidelines, is to make it a win-win. The other thing you got to keep in mind is that when the loan is finally closed, the lender turns around and sells that in the secondary market, mortgage-backed securities. So if there's no investor buying that paper, they're like, well, we can't keep originating these loans.
They don't mess around too. They do it quick. Same day you sign the paperwork.
Right, they turn around and sell it in the secondary market to keep the money going. And if they can't sell that loan because the investors feel like your credit's too low, or those DTIs are too tight, well, what's going to happen next? Well, we don't originate these loans anymore. Now we want to, instead of a 660 minimum, we want 685.
Wow.
Right? Or instead of a 46 cap DTI, we're only going to do it 44 cap. Right? Those things you can expect. And it's to make sure that this doesn't come crashing down on everybody. Because it's not a good thing when people begin to default.
So these investors back last year, they were locked in on 3.5%, which sucks. I mean, they could put their money in the stock market and make more.
There you go. You make an excellent point. This is why interest rates are really irrelevant when you think as an investor. For that reason. I'm going to buy a 30-year note and collect 3% on it. I'm missing out on 7% returns elsewhere, right? Or by originating a loan today. I know for the consumer, it gives them a sense of comfort. And it's at the point where it's backfiring for all of us, because 80% of the people are sub 4 or 5%. They're locked in. They don't want to sell because, it's scary, 7% rate at a higher loan size. And so that's adding to the inventory problem. You see? So waiting for interest rates to drop as if that's a saving grace is not a good thing for all of us right now. We just have to accept higher for longer. It's the new norm. After a while, we're not even going to think about it. Like, what's the rate? Oh, it's 7. Oh, okay, sounds about right. It's just the new norm. I mean, after inflation and all these companies adjusted their prices, Cumberland Farms down the street right over there was 99 cents for a cup of coffee. Now it's $1.39. They're not going to bring it back to 99 cents or anything less than $1.39. It's the new norm, right? And that's what happens over time. It's just we have to go through this pain together. I'm talking about consumers, investors, and real estate professionals. We're in it together. It's the same boat. The difference for us is we're 100% commission, right? Yep. So if there's no success in a closing, then we didn't get paid for the hours we invested in preparing your budget, your program, your plan, helping you look at houses, driving around, number of weekends, being away from family and the kids and this and that to help you find your dream house, and then it doesn't happen for whatever reason. That sucks. That sucks. So
what products do you guys have for someone? Okay, so you say FHA. As of now, they're saying that 75%.
That's a self-sufficiency rule on 3 families and up. Yeah. That doesn't apply on singles or twos.
So that wasn't the case before?
No. They added that a couple of years back, actually. Okay.
So, but for someone, if they're doing conventional or any other, they don't have that rule.
No, conventional doesn't have that problem. Again, it's about balancing. So conventional allows you to do the 5% rule. And when this was announced that it was going into effect November of 2023, again, the social media was flooded. It was like 5% option. You don't have to deal with stuff. Yeah, it's true. But you still have to balance the seesaw. 5% down compared to 3.5%, it's more money down. Whereas FHA usually has a 3 months reserves requirement on these multis of 3 and up, the conventional might require 6 from you. So that's more money. Where FHA makes leniency in terms of your credit history, conventional wants squeaky clean. I mean, there's a late payment on a credit card from 12 months ago. That may not approve the loan. So it's not that it's necessarily a better product. Yeah. The illusion tends to be sometimes, or the misconception in the market by listing agents is that, a conventional buyer is better than an FHA buyer. That's not necessarily the case. FHA allows for a higher debt to income ratio. This helps a lot of new professionals who just graduated with a ton of student loans. They make the money, but the DTI is just tight because of the student loans. They could have been conventional otherwise, but they had to go FHA. They're not bad buyers. It's just FHA is going to have some additional requirements. But that's a great product for a first-time home buyer / investor if you're trying to buy a 3-4 family home and house hack. That's an excellent investor product. It really is. Where else do you buy a business with 3.5% down and then the bank gives you 96.5? You wouldn't do that if I approached you and said, "Hey man, why don't we buy this coffee shop? Yeah. It's $100,000. You put up $80,000. I put up $20,000. And we're gonna own it equally." You're gonna look at me like, right? But that's what the bank wants. The bank tells you, "You want a house? Give me 20%." You're like, "No. I'm a first-time coffee shop business owner." They're like, "Right, then do 3.5," and you put up 96.5. You're like, "Wait, what? I just laughed at 80. Why would I agree 96.5? Yeah. So you have to think as an investor and take the me and the feelings out of that equation and think about it logically. Like, okay, and then understand that after you buy that first home, don't expect to buy the second at 3.5. You're an investor now.
So what can you do? How can you after the first year?
Yep. Number of things. If your home has a lot of equity and some time has passed, you can consider refinancing and tapping into that equity so that you have some seed money for this next investment. You can partner up with individuals, right? Off the books. Approach family, friends, people that you know, and just ask them, "Hey, I'm looking to buy my second property and I'm looking to syndicate and raise a little bit of money here where I'll pay you back X amount on the interest or I securitize that as a note." You got to get a little creative there. So now you have that money down. There's individuals that do side hustles, right? And then they begin to raise money and put it aside. I'm making an extra X amount of dollars from flipping furniture, marketplace, DoorDash, whatever it is. And they raise the money, because when you're stepping into the entrepreneur world, it's access to money to continue to do business. Then this opens up another opportunity for individuals who like the idea of managing a project or the entrepreneur spirit, or maybe do it yourself, where if they find properties that are in distress, see if you can buy that on the market. And if there's a good equity position, we have private lenders. And private lenders work differently than the banks. They provide speed and convenience, and they charge you a premium for that, which is higher interest rates and a couple of points. A point, for those who don't know, is 1% of the loan size. So if you borrow money from a private lender, say $200,000, 1 point is 2%. And if they charge you anywhere between 3 to 5 points, we're talking about $6,000 to $10,000 in fees on top of the loan size. So on that 200, you're paying interest-only payments anywhere from 12 to 14%. And when you go to cancel out that, when you're refinancing or selling, you still owe the 200, and is the 12,000 in points, or what the $10,000 in the points if it was 5 points. Yeah. So 210 to cancel. And you invest the sweat equity of rehab into place and bringing it up to a market value. And now you have this potential capital in the form of reselling the home or refinancing and keeping it if it fits within the refi guidelines of a property in that nature.
So if you got someone who was like, hey, this other lender, I can't buy this house because they won't approve me for so whatever. I have to fix up my credit or do whatever.
Right.
They come to you and now you have other ideas and other ways for them to be able to get that.
Yeah.
Not only just lending, but there's hard money lending. There's other options that they can do.
Absolutely,
Right.
absolutely. I think it's important to set expectations that this isn't about like we work some magic and do something that no one else can. What happens is sometimes there's people in the industry that don't understand the products well enough to be able to put a game plan together for you. They're used to the cookie cutter approach, like good with first time home buyers. But then when it requires that next layer, there's some complexity in there. And some people know how to navigate through those nuances better than others, particularly if they have experience. So that's one element. The second is being a straight shooter. Sometimes some industry professionals don't know how to articulate or tell the person without sugarcoating, like, man, we got a lot of fundamental work to do here. Whereas others will say, look, we got to put you on a credit repair program. And this is going to take 3, 6, 9 months. And you're going to have to pay a professional. We have one. We can recommend one. Whatever the case is.
Oh, you do?
Get this. Yeah. We partnered up with, in terms of relationship, with a few credit repair specialists.
Wow, okay.
That this is what they do full time, not part time or not a part of some affiliate program. That this is what they do. They're certified in understanding the consumer protection laws and they custom write letters. There's some credit repair companies that just use templates. And my understanding, because this is in my area of expertise, but my understanding is this: those templates just don't create the impact on the creditor as a handwritten letter does that's customized on the scenario. And then, someone who's doing it as their full-time source of income might be approaching it a little different than someone who's relying on the template structure of an affiliate program.
So that's good because, a lot of times I see where they don't qualify for a loan, but, you guys can guide them and be like, all right, this is what you need to do.
Yeah.
Have a game plan to be able to get to that goal.
Absolutely. I mean, the plan works if you work the plan.
Yeah.
And sometimes people don't stick to the plan. They're not being patient enough. They want instant gratification. I keep watching on TikTok or Instagram, this person, that person, blah, blah, blah. You can't believe everything that's out there. I mean, take it from people who do this business for a living. We know it doesn't always happen that fast. Those are rare situations. So think about this. If I want to have 2, 3, 4, 10 houses in my portfolio, doesn't it make sense that my credit just needs to be impeccable? Absolutely. Yeah. So why not invest the time to have an impeccable credit? If I want to go, or I need a very important life-saving surgery, wouldn't I want the guy who has the years of experience preparing for that surgery as opposed to the guy who became a TikTok doctor because he saw enough TikToks and now, trust me, I'm a doctor? No. Right? Same thing. Get your credit impeccable. This country was able to do a revolution and declare independence because of credit from France. Right? So credit is very necessary. I mean, it stems from the word credibility. The credit scoring system in the United States is not racist. It doesn't discriminate. It doesn't give you points based on your gender, religion, sex, age, or any of that. It's just like, how have you managed these existing lines of credit, whether they're credit cards, personal loans, student loans, whatever, and how long have you had them for? So an account that's been established for 6 years is going to have more weight than one that's had 6 months or 6 weeks.
Yeah.
Makes sense. An account that you've always paid on time, no excuses. It tells me you're responsible and you prioritize paying your debts. Game of Thrones, the Lannisters always settle their debts, right? It's very important, credit. So if I want to be an investor, I got to get my credit on point. And 2, the reason you want to is you might have heard individuals as they're building a portfolio, corporations, they register an LLC, maybe eventually as an S Corp, whatever the case is, to add layers of protection, put the property with the LLC in a trust to create another layer of protection, make sure that gets inherited to the people you want. God forbid something happens, life insurance is in place to pay off those debts or to borrow against those assets.
So you help guide people through like,
Absolutely.
what they need to do.
You want to have
just
this comprehensive plan. See, that's what I mean by game plan. It's got to be comprehensive. We need an insurance provider, not just to insure the house, but insure you. You're the biggest asset here. What happens if you pass away unexpectedly?
Yeah.
What happens to this house? It's going to go to probate court. There's no guarantee your family gets it. But if you have it in a trust and everything is structured correctly, you're the trustee, there's the beneficiaries, you got legacy that's protected, right? So you got to talk to an estate planner. All this is important, and a lot of lenders don't know that. A lot of realtors don't know that. That's why I keep saying, talk to an advisor, somebody who is building this network into this knowledge. This is very important.
It is.
It isn't about, oh, can you sell my house for 3%? No, it's, can you help me achieve my goals and can I get the results? Great, I'm hiring you.
Exactly.
So
that's who you want.
That's what
someone
you
who
want, right?
trusts you. Like, you know.
Absolutely. And that conversation goes out the window. Look, I wanted to be a sports medicine doctor. And one of the biggest takeaways that still sticks with me when I was doing my internships, I had the opportunity to listen to some residents. And, you know, we go through the same emotional roller coasters like, am I cut out for this? Am I going to make it? You know, these tests are hard. It's not easy. And it's purposely meant to be hard because not just anybody should become a doctor, right?
Yeah.
And the gentleman tells me, what do we call the person who graduates first of the class? Valedictorian. Okay, cool. What do we call the person who graduates last in the class? And we're all perplexed. Last in the class, huh? We call him doctor. They're still a doctor, right?
Yeah, right, okay.
They're still a doctor,
Yeah.
right? So that's what the point that I'm trying to make here is you want to be talking to an advisor, someone who's put in the time to be able to guide you through these nuances. The market is changing and the market is evolving. The rules are changing with it. The strategies are changing with it. And you need somebody who's actively boots on the ground, finger on the pulse, and actively investing. So
Who
it's
understands.
so it's cutting edge. It's the latest in this so that you're moving along.
And not everybody's the same.
Right.
You got to understand their
So
situation.
that person graduated last in the class is still a doctor. They're probably a better doctor than the valedictorian. The valedictorian just knew how to get higher test grades, right? And right, that could be the case. But you need the surgery. You don't start shopping around for doctors. So what was your GPA? You know, can you do the surgery for $5,000 less? No, you're like, I need you to save my life. How soon
Yeah.
can you get me in there? I'm all booked up. Next appointment's August. I hope I can make it to August. You're going to be fine. We did some preliminary tests. We'll just line everything up. We're going to, my next opening to take care of you is if something happens, we'll try to move you in.
Yeah.
Why do they disrespect our time in our profession and insult us like that? I know they don't do it on purpose, but you need to understand that this is a business. I'm not in a charity. I'm not a 501c3. I'm not the United Way or the Red Cross. I don't live on donations. I don't even have a base salary. So that whole, can you do it for cheaper commissions? Like, seriously? Do you negotiate your cup of coffee with Starbucks?
So there's a couple things I want to bring up. How many times do you get someone who's like, thanks for helping me buy this property. Next year, when it's time, I want to buy the next one.
Yep.
And then they forget about, you know, the next year comes along and they forget about it. Like 6 months later, another year goes by.
It happens.
And they forget about their goal. How often does that happen?
It happens. It happens because life happens. Some individuals have extenuating circumstances that come up, or family plans change where they move, something. But the majority of them, they listen to mouthpieces, uncle, cousin, aunt that knows everything about everything, yet they don't own real estate. They listen to their colleague at work, or they let themselves become paralyzed by the fear of the news. Oh, I don't know, we're in war, the Ukraine-Russia thing. Oh, it's a presidential election here. Power won't do this, blah, blah, blah. And it's like, you realize you're just regurgitating information that you don't seem to understand fundamentally. You gotta filter the noise. And that tends to be the reason why people forget their goals. They lose sight of it. And it's only normal. We get tired, we get stressed out. But if you're working with an advisor and you reading the newsletter or the emails, we periodically change. I don't send out, I don't message every day. Or check some of the content online. I'm not dancing or showing you in the gym doing my deadlifts or squats or my coffee or that I'm walking. I do my exercise, believe me. I go to the gym, I work out and I leave. I don't have time to set up the camera or tripod and do, you know, unless I was an influencer and that's how I made my money. Yeah, but that's not the case here. But follow us. Let's stay in touch. Let's have a relationship. See, a relationship is where the grass is green because we water it. Where the grass is well kept because we attend to it. But you can't expect a relationship to flourish if you don't attend to it and invest time and energy into it. And it's got to be a two-way street. Believe me, I do my part. I reached out. But if you become non-responsive after a while, I don't want to be that annoying pest. I want to be that invited guest.
So you want someone who's like, hey, Alejandro, thanks for helping me finance this property. It's been 1 month. What should I do now?
Absolutely, absolutely.
What should I do?
And understand,
you know what I mean? Like,
right?
oh, wait 3 months and do this. You
Absolutely.
know, like you tell
But
them.
understand that in this relationship, what I'm bringing to you as well is my network. My network. If you have a problem a month in, you should feel comfortable and call me. And I tell them all this. Call me and I'll find the contractor, the insurance adjuster, if that's the case, or the plumber, or whatever the situation is, or point you in the right direction with the city. I'm a resource. And I have to respectfully turn down people who call me after they chose not to do the deal with me and call me for advice. I'm like, I'm sorry, with all due respect, you're not my client. I can't give you time, energy, expertise, and guidance when you chose to do business with someone else for 0.25% of a rate that's saving you $12 a month. Go deal with them. I'm sorry. I can only give that attention to my existing base of clients and those that I'm working with. I find it very disrespectful, to be honest, because it's not right. I mean, it's like me going up to a different doctor down the street for follow-ups on my surgery, even though my surgery was done in Boston. It just doesn't make sense. You know, you have to have boundaries in relationships. That's what this is, a relationship. We're dating. We're dating, right? You know, so why would you use a different set of rules for your partner in life and other people in a different? I'm a partner. This is a relationship. If you want that, and that's what I'm offering, we're gonna work great together. But if you see me as a Kleenex tissue and a commodity, I'm not the guy for you. You know, with all due respect, go bother the guy down the street who at least gets a base salary and could care less if you get approved or not. You know, do your application. Sorry, you don't get approved, press a button, and you get a generic piece of paper. I'm 100% commission. I'm incentivized to help you win. You see the difference? I'm incentivized to help you win. And if you follow us on social media, we're showing you the properties we're actively working on, the properties that we're analyzing with our investors, and the good, the bad, and the ugly. Because it ain't all, you know, rainbows, roses, and sunshine. You're gonna have bad tenants occasionally, but those are learning experiences. You're gonna have problems arise with your house, but that's part of the business. You have to account for some of that. You know, Walmart, and this is an analogy I share a lot. There's a Walmart, and I'm not gonna say where it is, but everybody I ask about it says, oh yeah, the shoplifting is it's right in front of you. You see it all the time. It's crazy. There's no shame. And yet that Walmart's still open because they're still making money despite the shoplifting. So because you have one bad experience with a tenant who's a jerk, because people can be jerks, or maybe they're dealing with stuff they just don't know how to deal with it and they're mad at the world, but they're deep down good people. They're just being jerks with you as the landlord. And so you have a bad experience. You had to evict them, whatever the case is. Real estate's terrible now? No, real estate's still a great asset, and don't miss out on your asset and your pursuit to happiness and financial freedom because of one bad tenant. I've had to evict tenants, and I'm still looking to buy more real estate because fundamentally it makes sense. In this market where prices are high and rates are high, real estate's still a great asset class.
So Alejandro, how do people find you?
Well, I'm online, Instagram, Facebook, and TikTok, and YouTube, and my phone number is 401-808-4427. If I don't answer, text me. Just tell me who you are, what's up, what do you need, and if we can figure out a time to talk on the phone 15, 20 minutes. I don't answer the phone because if I'm with a client or in this situation, the phone's rung a few times, I haven't answered it out of respect to the person I'm with. And also, after 8, it's late and it has to wait. So if you're calling me at 9 o'clock on a Friday night, I'm probably with my wife trying to watch a movie. I'm sorry I'm not answering your call because you just saw something on Zillow and you're trying to get numbers last minute. Normally, when I meet with my clients, I'm also going to show you your numbers, and you realize that the difference between $400 and $410 is maybe $60 on your monthly payment. I'm trying to educate you because you shouldn't have to call me or reach out to me after seeing 5 houses over the weekend.
Stop everything, call you because you're
you gotta when you get out to see a house, you gotta be ready to make offers. And I'm gonna tell you why, statistically, and you can verify this. Rhode Island's market is very interesting because Boston's 45 minutes away, New York's about 3.5 hours away. We're in an area which the cost of living is very attractive to these demographics. And here's what's happening. About a third of the properties that are selling in Rhode Island are being bought by people from out of state, mainly Massachusetts. And 28% of those homes are being bought in cash. So what does this say to you? This says to you that the person from Boston, Randolph, Laurel, Revere, Quincy, wherever they're coming from, they're not driving 45 minutes to Rhode Island to window shop and just kind of look around. They know their numbers and they see the house, they're telling the agent right away, make this offer, blah, 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 and they sign, boom, submit onto the next house. They're not saying, oh, thank you, Kamil, for showing us these houses. We're going to take the weekend to think about it and we'll get back to you on Tuesday. Because by the time you get back to them on Tuesdays, all 3 houses are under contract. So if they're not wasting time driving 45 minutes an hour to look at houses, neither should you if you're driving 10, 15, 20 minutes. You got to know your numbers and be ready to make an offer, It's about speed right now. And I find that that's usually the case sometimes when people are like, oh, it was just, we liked the house, but someone else, his offer got accepted. Did you even place your offer? Because you're not going to get anything accepted if you're not placing offers. The best way to get an offer accepted, you ready for this? Is to make an offer.
Awesome. Yeah. Well, thank you very much for stopping by. That was awesome.
My pleasure, man. I know it's a very different approach to the real estate, and it's high energy, and it's a sense of urgency.
Oh, that's awesome. Yeah,
and the reason for that is because that's what the market calls for now. Urgency, decisiveness, business, know your numbers. So do your legwork first. Take the time to get pre-approved. Talk about your game plan.
Alejandro will get you the tool belt.
And put a game plan on.
He'll put the tool belt on you and then send you off.
Yeah,
He'll be like,
yeah.
All right, I got the hammer, I got the screwdriver.
Right, exactly.
Got all my stuff here.
Put them in orders before they exist.
Yeah.
That's a proverb from the Tao.
Awesome. Cool. Thank you very much.
All right, till next time.